Not FANG, not Magnificent Seven, just M&Ms. The sole survivors of the brutal quarter from what used to be the most captivating group in the market. Yep, only 3 of the mega caps finished the first half at all-time highs. And it's worth trying to figure out how that happened. How did Microsoft, NVIDIA, and Meta manage to triumph? Especially when all of their stocks had hit some pretty hideous darn levels earlier in the quarter. What were their secrets? Well, why don't we start with Microsoft? Here's the story you used to be able to set your clock on. It revolved around business software and Azure. That's the cloud computing business. In January, Microsoft shocked the world by missing Azure's numbers. Yep, they blew the estimates. The division grew 31%, but the street was looking for 31.9%. Coming from a company that rarely misses and almost always guides up, this was seen as a stunning defeat, and the stock dropped over 6% immediately. Stock fell from 442 before it reported to around 345 at its lows in April. But when Microsoft reported again at the end of April, their Azure business actually grew at a 33% clip. I know it seems like nothing, a gossamer twig, but it drove the stock right up to $500 at the end of the quarter. On less than 2 percentage points of growth, the stock added over $150 and hit the new high list. NVIDIA's stock started the year at $134. Little did we know that this stock, after years of being an institutional holding, had switched to become a favorite of individual investors. And even the meme stock guys who were trading it around the clock, they picked a lousy time to get long. First, at the end of January, we found out about some Chinese dollar store outfit, AI outfit, DeepSeek, which said it could make quality AI models for much less money. Everyone acted like this was the end of the whole AI story, including NVIDIA hardware, even though DeepSeek never even broke out its hardware costs, deep subterfuge. Eventually, NVIDIA stock had an anemic bounce in March, coinciding with the annual GTC festival we went to, where CEO Jensen Huang wowed us with what the next generation platform could do. But then at the beginning of April, the stock collapsed on word that the president didn't want NVIDIA to sell any of its AI chips to the Chinese, even the outdated ones. That eventually caused NVIDIA to take a $4.5 billion write-off, as they lost access to a market Jensen said could be worth as much as $50 billion. When that happened, the memesters left the building. Stock bottomed at $86 and change in April. Can you believe it? And that was time to buy, as NVIDIA began its unheralded run all the way to $158, where it closed last night. The amazing thing? This rally was based on nothing more than semiconductor superiority and persistent demand from the hyperscalers, the same things that had the stock roaring all last year. I guess you could say that there was nothing wrong with NVIDIA the whole time. Finally, there's the toughest one to explain, Meta. This stock started the year at $630 and then got caught up in the rise and fall of everything growth, sinking from $740 in February down to $480 in April. A week later, and only a few points from the bottom, Meta reported a magnificent quarter that crushed the estimates. On the conference call, we discovered you no longer needed to advertise anywhere else, save Amazon and Google. They didn't mention that, but that's me. On that call, you realized that when you go with Meta, your ad will be shown only to the people who want to buy your product. No other medium, save maybe the NFL, seems to reach anyone these days. And that's why the stock finished the first half at $738 yesterday. This machine really works. So what did we discover? Microsoft doesn't miss more than once. NVIDIA's artificial intelligence chip remain unrivaled. And Meta's a ridiculously cheap stock that should never have traded down to $480. Microsoft, NVIDIA, Meta. M&Ms. Melt in your mouth, not your hands. Okay, the early bull market summit promise to find just for you right here on Minute Money. I'm Jim Cramer. See you tomorrow.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.